Hey everybody, JC Peretz here, founder of Trend Labs, here with Stock Market TV. And boy, do we have a special guest for you today. But before we bring on Mr. Jeff Macke, and if you don't know Jeff Macke, I don't know where you've been. You know, many of you guys, yeah, we know Jeff. He's a legend because he really is. And so one of the things that makes a legend is somebody who's such an expert in a certain part of the universe in general, in this case about the market, that they're so far and beyond anybody else that you can't even think about who's number two, okay? When it comes to the consumer, 70% of U.S. GDP is the consumer, right? A big deal. A lot of brands. We see them every day where we as consumers spend our money. We know all these names, right? All of them. You know them. I know them. Grocery stores, fast food stores, places where we spend our money, right? Where my wife spends our money, right? Walmart, Amazon, all these things. But there are so many of them. And here's the beauty of this market. Whether we're in a bull market or whether we're in a bear market, there's going to be consumer stocks that are absolutely crushing it, right? Not just retail, consumer in general, that are absolutely crushing it. But also, in the best, strongest markets, there are consumer stocks that are getting destroyed. We're in a raging bull market. Wendy's has decided to boycott the bull market, right? Perfect example. Winners and losers in bull and bear markets. The dispersion, the bifurcation in returns in consumer stocks, where you have enormous winners, not just in months and quarters, but over years and decades too. There's something here for everybody, regardless of your time horizon. And the losers, the biggest losers in the market, the dispersion, the difference between the winners and the losers year over year in every cycle is wider than any other sector or group of stocks out there. Maybe other than biotech, but that's a whole nother animal, right? The consumer stocks, right? So if we know that, that's a huge advantage for investors. There's always opportunities no matter what. I like that. But I don't know anything about the consumer. I've learned a thing or two hanging around some smart guys, but you want to go straight to the source, right? And there is nobody on planet Earth that knows more about the consumer and their behavior than Jeff Macke. There's not even a number two or number three. He stands alone in this arena. And we are incredibly fortunate, and don't think I take it for granted. You know, Jeff is an OG, like a true OG, been there since the beginning when this entire massive, beautiful community of traders and investors of all time horizons, all kinds of social networks and blogging. Truly there at the beginning. I could tell you. I was there too. I could tell you. Jeff is a true OG. And to be able to have someone like him to come in, and share with all of us, myself included, by the way, his perspective on the state of the consumer and how all of these different stocks are going to be impacted, good or bad. And the fact that AI has hit many different industries, but nowhere is it going to be more impactful than in the consumer. And so like anything else, there's going to be winners and there's going to be losers. In consumers, there's always winners and losers. This is just going to expedite that. And we've been seeing it. Jeff and I, like I said, I'm very lucky to get to talk to Jeff all the time. And he tells me, JC, if I was on a deserted island, stuck on a deserted island, I love how humans think like that. Like we're ever going to be stuck on a desert island. But hypothetically, if he was, and he had one piece of data that he needed to know the state of the consumer, that is Walmart, right? And what Walmart is saying. So Walmart just reported. So we actually know what Walmart is saying. And so Jeff swears up and down that that's the data set that you need, where it all starts from. And then you kind of go from there. So today, Jeff is going to talk about a couple of things. First of all, what we learned from Walmart. But number two, most importantly, how AI is really revolutionizing the consumer and the companies that are around the consumer, and how there are some big winners, and we're seeing them. Saw it today, seeing big winners. And we're seeing big losers too. And that's not so much good or bad or bullish or bearish as it is just different, right? So we need the guy to tell us which are the stocks that we need to be buying and which ones should we be ignoring or shorting outright. And so without further ado, ladies and gentlemen, can I bring you Mr. Jeff Macke? Come on down, Jeff. How are you?
Thank you, JC. I'm a man doing well. I'm excited. I'm excited to be here. I'm excited to share the process with people and kind of talk to the folks at home about what I'm doing. It's going to be fun. Should we launch into it here? I'm here to talk about, listen, it's a bloodbath out there. The party's over for AI, right? We've seen it already start to unfold. Last year was all the Mag 7. That was a piece of cake. That's no longer going to work for a trade. What you're seeing is we're at the dawn of a revolution. We're at the dawn of a brand new age, and it ties in perfectly what I'm talking about because it speaks directly to the consumer, the end users of AI. I'm here to talk about the easiest money in AI and the great re-rate we have going on in consumer stocks. In today's presentation, I'm going to tell you how I've 70x my money over the last 20 years, just with 8 to 10 stocks. Concentrated portfolio, much more concentrated than the book is going to tell you how to do it. The secret to consistently finding retail re-rates. That's the term you're going to hear a lot. We'll get into what that means. But these are stocks that are going to quickly, you're going to get 3, 4, 5x, maybe even 10x. If you lever it up a little bit and you kind of use the entire strategy, how I've done it time after time through cycle after cycle, and why now is the best time. This comes around once every few years. You get the .coms that came through. You got the big box stores that come through and figure out how to do e-commerce themselves. You have the times when you finally have the malls were all going to die. Well, that turned out not to be true. These are revolutions that occur every so often, every 5 years, every 10 years. And when they hit, this is when you can make money. And that's why you start profiting today. JC mentioned the Rosetta Stone. Walmart is why I pay so much attention. It's not because it's intrinsically fascinating to me. It's a big, huge store. It's a big, huge store that everyone goes to. To a lot of folks, that's as interesting as taking the bus, another huge service that everyone uses. But to me, and they laid it out for us again today, they laid it out last summer, this is where the revolution is going to hit the road. This is how it changes everything for the consumer stocks because they're using AI in ways that is going to change the profitability of the entire organization, make it easier to shop, going to change the way you shop, going to change the way your grandparents shop, the way these companies work from the front of the store all the way to the back where they're taking product in. They did it. They told us all about it last year. They've got 4 different levels of AI working there. They have Sparky, which is their cutesy name for the shopping bot. This is if you enter in, listen, I want to plan a party for a 5-year-old. It tells you 30 different items.
This is all AI, Macke.
It's all AI.
All AI and these revenues on the online because of what the Sparky and then some, that's going straight to the bottom line.
It goes straight to the bottom line, and it's perfect for the consumer. The best revolutions here are ones that work for the consumer. They make it easier for you to shop. They answer the question, listen, I'm planning a birthday party for a 5-year-old. I'm a dad. I'm Joe Regular Dad out there, which you're speaking as Joe Regular Dad himself. You don't know how to do that. Sparky's going to be the guy that you interact with. Walmart carries 200 million different items, 200 million different items. There's nothing AI is better at than cutting through all of that unbelievable mountain of information and figuring out how to match that to the consumer. Now, that works for everything from a 5-year-old's birthday party to a pair of pants. If you're like 99% of the males out there, you hate trying on clothing. Give me a pair of pants that fits right away. If you sell enough clothing, enough product, and you know enough about me, that's going to be a selection that becomes much easier. That's going to drive the top line. That's beautiful. That's great. They've also got Marty. Marty's the supplier. So Walmart doesn't just sell Walmart product. They bring in different product from the outside. Marty's the guy on their AI side that helps make that easier, helping their suppliers be better at their job, making them money. And so you got the consumer benefiting, you got the suppliers benefiting, you have the associates. The scheduling at Walmart is improved through AI because the store manager gets to come in. They don't have to listen to sob stories about how this person needs Saturday off and Sunday off. You wouldn't believe it. I grew up in retail. My first jobs were managing stores. I've actually done the scheduling. It's a nightmare. No more. AI does it. And they've put it in through the entire chain. So a good idea doesn't get buried in Bentonville, buried in the 200,000 employees, 2 million employees. Actually, Walmart has largest employer in the world. Instead, these ideas get surfaced all through AI. This was the light bulb moment last summer, when Walmart announced all these changes, and it's going to change the face of retail. It's just that Walmart is the first one to do it. But we've seen this before, JC. We've seen it before, and this is how you make money, and this is what's so exciting about it.
So guys, pay attention to this part right here, right? So you're seeing what Walmart is doing right now. right? Different cycle, different stages in their, in the company cycle. But this is the money-making part, right? Jeff, really tell us what's going on here, because I don't know anybody who understands Target better than you.
The preamble aside, exactly, man.
And why should anybody else care about Target, right? People are like, oh, I don't care about Target. Well,
because you can make a lot of money shopping at Target and buying Target stock. Listen, they go through phases. Retailers fall in and out of style. Let me tell you about the last time Target was as unfashionable as it is today. It was about 10 years ago. And no one could figure out how they were going to possibly compete with Amazon. It was the billion-dollar question. No one thought they could do a damn thing. I did nothing but obsess over it because I knew if they could unlock that value, if they could figure out how to make themselves a better competing operation, that was going to change the game for them. And then in March of 2017, Target came out, and they said, listen, we're going to spend $7 billion. We're going to change the stores, and we're going to make every single one of our stores a tiny little distribution center where we can do e-commerce. Turns out they have thousands of stores. That's beautiful. It was a perfect system, and it was an idea that I'd been harping on and barking about in public for ages. It was exactly my idea. Wall Street hated it, sent Target down 12%. I loved it. I was giddy. I absolutely just had giddy pants because you don't see these opportunities come around. I knew this was the right plan. I knew it was going to be profitable. Not only that, Wall Street's immediate hatred of it took the stock down 12%, so I got to buy it on sale. Who doesn't love a deal? And here's where the system comes in. Here's how you make money from this. You lay siege to companies when they're getting through this transition. When the game changes, you figure out who's taking advantage of the new rules, you get long, and you start investing in it. I bought Target, bought it the entire way out. Just bought it. There's nothing that makes me happier as an investor than finding a trend and riding it. Made 3-4 times my money just on the common stock. Just buying Target, buying the dips, buying the uptrend, and more importantly, getting the heck out once that uptrend broke. But that's another story. By the time that happened, I was up 3-4 times, which, better to poke in the eye with a big sharp stick and a retailer that's 60 years old. The place was founded in 1961. They've been through a cycle or two, making 3 or 4 times your money. That's about as good as you're going to get there. That's terrific. But if you want to make life-changing money, it's a great return to get that 3-4. But the kind of special sauce that we're talking about today is adding to it. Because you know what helps a little bit to kind of soups things up? Get a little greedy. And that's through leaps. Leaps are just long-term stock options. You're buying calls. You're buying calls, but you're giving them a year out. And so every time there's doubt, every time that Wall Street goes through ebbs and flows, and you're supposed to care that there's going to be a war with China, or oil prices are going to go to the moon, and that's supposed to be a nightmare for you. Well, you know what? You kind of look past that and you buy the dips, you buy that uptrend. As long as you're hitting on support, you just kind of add your leaps. Through that, made another 15-fold on that. Now, the dollar figures are smaller on those. It's you're putting in $1,000 for every $5,000-6,000 you put in the common stock because you're taking a little more risk with those options. But that's where you lever up your money. All in, you make about 12x. That's life-changing money over the course of 7 years, buying a 60-year-old retailer, a discounter, a boring stock that no one wants to talk about. What's exciting to me is making a living doing things in an industry that I understand, in a niche that I understand, and using a system that's really not complicated. You don't have to overthink it. You're not committing a ton of capital. You're just plugging away. Again, it's a siege mentality. I'm going to dig in. I'm going to stay right outside this city, and I'm just going to launch attack missiles at it until I'm right. Takes a while, but when you find these changing situations, that's the way you make money. That's the way you make a living doing this. It's the way you can make a living doing this too. So I'm pretty excited to help it.
Jeff, I've known you for a long time, and you are very good at simplifying things that could theoretically be complicated. You are one to think through things and actually come up with your own conclusions. Back in the day, we used to do that sort of thing, right? You're very good at doing that. Can you explain to me, right? It sounds very easy, right? It's just very simple to do. Oh, yeah, just a great company. You buy Wall Street hates it, just buy it. Now, seriously, obviously, not everybody could do this, right? Otherwise, everybody would. Explain to me the difference, how somebody might, the way things used to be maybe, or maybe the way people might want to approach this, and then show me the Macke way.
Here's the difference between the institutions, the way they run their money. Because again, these revolutions don't come around every day. If you're running money for a big institutional firm, you have a zillion different stocks. You have a basket of 50 of them. You slightly outweigh the better ones, and you're not interested in really kind of chasing these type of returns. You come up with here's a Boston Consulting Group matrix that they had. You have question mark kind of companies. Those trade with middle of the road multiples. You got dogs, and those are the Walgreens of the world. You just leave them out of there. You got cash cows. They're never going to grow again. You got the superstars. And that works out fine. That's the nifty 50 for you history fans out there. You might have heard of them. Those are the stocks that you just buy and put in a drawer. And that works until you face plant and it doesn't work ever again entirely. But, if you want to be an institutional investor guy, if you want to run and be an analyst for a hedge fund, that's the way you're going to run your book. That's how it makes sense. If you're an individual out there trying to make a living, trying to get a little extra ching, trying to produce real returns that are going to change your life, I've invented the Macke Matrix. I named it that because it alliterates and it has my name in it.
I love nice. Good alliteration, Jeff. Good alliteration.
Who doesn't like a good alliteration? It is. It's catchy as all. It's all get out. It's relatively simple. I'm looking for companies that are scaling. These are going to get your re-rates. A re-rate is when you get a multiple expansion, you get a game-changing type of stock. You get one of those stocks, and this is what I love about the consumer space, where it's a brand or a company that you see every damn day, and it's Domino's Pizza. And you say to yourself, I eat this garbage pizza 4 times a week because I'm, again, just a parent or just a regular Joe. And I never thought to buy this stock, which turns out to be an amazing stock. That's specialty scaling. It goes from cute to just something that's a perma company. Lululemon did the same thing. You get a turnaround. Turnaround's another great example. These companies that come back and rise from the ashes again. This is another thing that happens all the time in retail. Almost unique to it. Most of these companies just disappear. You're not going to see Kmart around any again, but American Eagle, they make a great comeback. That's a turnaround story. Target's poised to do the same thing.
Crocs was another one, right? That came back, right? Ups and downs, that thing.
They've been burying Crocs, JC, for 20 years. Since they came public, those ugly plastic shoes have been going away. And dang it, we made money trading them on the long side last week because you know why? People like Crocs. It's a comfortable shoe. They're timeless.
My kids wear them. Yep.
Exactly. You got what we have now, and this is the real key to AI. You're going to have margin growth. This is going to be a huge catalyst behind the scenes that's going to take it, and it's going to give you margins that you didn't have before. The entire chain, the whole food chain of Walmart that we went through at the top of this, that's going to make them a more profitable company. You don't want to know why Walmart is selling for more? It's more expensive than Amazon. And as an aside, if you want to lose money in markets, short things because they're too expensive. So Walmart's been too expensive for the last 30%. Waste your time. It's more expensive because the margins are going higher. Because Walmart is going to spend $30 billion CapEx this year, and Amazon's spending $200 billion. How many rockets did Walmart launch last year? JC, quick question. How many would you guess? How'd the rocket launch program go at Walmart?
0.0.
Goose egg. 30 billion is much better, much better than doing freaking 50 billion. And finally, you just get when you get a re-rate, when a dominant brand converts tech into durable, higher quality earnings. And so, it's a simple matrix that kind of works and replaces the more static model that we had before. And it works in a situation like we have now, where the key for the retailers that are going to be making money, the consumer companies that are going to be making money, and a lot of it, a lot more than expected over the next few years, are going to be the ones that use AI. And don't get me wrong, they're all going to use AI. They're all going to say they're using AI, just the way Macy's said that they had a .com business for 10 years while the stock went from 70 to 7. But the ones that do it correctly are going to be the Walmarts, and they're going to be expensive right up until everyone says, oh my gosh, hold your nose and buy it. And they buy it, and then they collapse. Once you learn how the re-rates work, you get greedy with the stocks and you ride the trend until the trend is just kind of common knowledge. And at that point, the trade's over. Again, if you're going to be an institutional investor, 8 out of 10 years, you ride the boring way. We're at the cusp of something right now where it's an opportunity where you can actually lever up your money in a world that seems to have gone a little crazy in the rest of the market, at least so far in 2026. Exciting stuff, JC. That's about all there is to it. And again,
no, but I think this is a good point for those of you out there wondering, in a lot of markets, 8 years out of 10, 9 years out of 10, you can go out there and you could spend $50,000 a month for some of this data out there, right? And these hedge funds do. right? It's expensive. They do it. And you could do that. And that's going to work 8 times out of 10, right? But that's not what's working now, right? That's not what's working. And even if you had the 50,000 to spend every month on that data, still ain't going to work in this cycle.
I mean, I'm not talking from the last like 5 years. I'm not talking about just .coms. That's the history of retail. That's 150 years of, you know what? Railroads are invented. So Sears is going to send out freaking phone delivery book, basically phone book size catalogs, and be the biggest retailer on earth for 60 something years. That was a trend. Walmart, Target, Kmart invented the exact same year to take advantage of the suburbs, just because the highway system came into being, and you make money from that. The .coms are the greatest thing. Again, it's a cycle that repeats over and over again. AI is the same exact type of thing. History doesn't repeat, but it rhymes. And right now, man, the rhythm, the beat is all about AI being the next big thing, the next big improvement. And this is what I've been doing again for 30 years. This is how I make my living. This is how I invest. Etsy is a situation that changed. It's a company that was a huge winner for me, entirely built on the idea that they stopped being a public benefit company. They changed the rules of the game, and they caught a flyer on .com. They were literally a public benefit company, a spiritual B Corp, if you will. $1.8 billion public, and they weren't interested in profits. That's weird. They came in with a new CEO. The story changed. They sharpened their focus on profitability. That happened in 2017. It turned into an absolutely fantastic investment. And another one where once the game changed, once the rule changed, it became a siege. Got long at $14, held it till 125. It broke the trend. I got out. They had some news today. It's done okay. It's done fine. But the story was over. Now, here's the exciting part, because you don't want my stories. You want money. If you trade alongside, the $1,000 turned into $11,000, $2,500, $27,500, $5,000 to $55,000. It's life-changing money. I mean, it scales really well. It's a nice story. Lululemon, my absolute freaking favorite. It's my favorite. It was summer in New York, JC, when Lululemon came out with men's pants. And you know what? You walk around in summer in New York, it's a little swampy. It's a little sweaty. Yeah. Lululemon is they specialize in technical wear, fabric that it looks like regular pants, but anyway, the whole thing is athleisure, which has now become a dirty word because athleisure went from just this crazy idea to everyday type of wear, everyday type of product. That company's going to go in and out of style over and over again. But for years, we just had to kind of sit there and wait for them to man up to figure out the men's segment. And the idea that they could be $1 billion business selling men's pants that were athleisure. That was unthinkable. That was ridiculous for years. But if you stayed long and you hung around and you believed in the concept, well, you wrote it when finally they took off. And then the COVID happened and it absolutely exploded. Absolutely became the hottest name that you've ever seen. Now, again, one of the other reasons that people don't talk about retail stocks, these aren't things that you buy and hold forever. The styles come and go. There's less permanence there. But you know what? You don't need real permanence, because if you were long with Lululemon with me, you went from $1,000 to $8,000, $2,500 to $25,000 to $40,000. It was fantastic. It was glorious. And you see, again, there's just certain cycles repeat themselves over and over. Abercrombie and Fitch, they became a better company. They became more profitable. They caught a style wave. And this was one that was given up for dead for all the best reasons in the world, because frankly, it was not a very good company. And they had that creepy, they used to have guys in the mall that would walk around with shirtless and it was just tacky ads, tasteless ads, but they finally became what they really are, which is just a good merchant. And I'll tell you what happened here. You walk around the mall. What I'm bringing to the party is not just the voice of experience and not just kind of these ranting siege type of things, but I'm actually going to the stores. I'm actually hanging out. What you saw with Abercrombie and Fitch is one of my favorite confluences, where you see parents buying clothes together, where you see teenagers and their dads buying the same basic jeans, the same basic jacket. That's what Abercrombie and Fitch did. This stock was never actually expensive on the ride up. It's just that I've been trading it along with American Eagle. They were both in the mid-teens for the better part of from about 2010 to 2020. Abercrombie and Fitch, most people miss this breakout, but the stock never got expensive. It was just it was performing extraordinarily well, and it was the right place, the right time. By getting long and by taking advantage of the leap strategy, we turned some real money. Again, over a 5-bagger. It was absolutely fantastic. That's what I'm bringing to you now. This is not a system for every time of the year. It's not a system for the next 20 years. It's a system for the next 5 years. And the secret sauce is going to be AI. It changes the game. It can change your world. It can change your portfolio by just giving you a little more liquidity and much better investing returns. That's what I'm here to talk about today, JC.
No, it really is great. And so you're the perfect guy to be able to, look over your shoulder and see what you're trading every single day, right? I mean, I've just changed the way I look at the world. I have a hard time looking at different brands. We talked about Texas Roadhouse. I'm in there with my family. I was like, man, I can't wait to talk to Macke about what's going on at Texas Roadhouse. This place is off the charts. I have a hard time now kind of living the way that I used to live, because now I'm kind of seeing the way the world the way you do, basically looking over your shoulder over the years. Guys, now is your opportunity to do the exact same thing. Do you want to know what Jeff Macke has in his portfolio? By the way, mostly long, but shorts too, because there's some bad ones in there for sure. And so the Macke portfolio consists of 8 to 10 stocks, right, that you're holding. These are the core holdings. Anytime that Jeff buys or sells a stock, you get notified immediately. And then here's the thing, right? So these 5-baggers, 10-baggers, 13-baggers, and then some, that's where the leaps come in, right? So 2 to 4 times a month, looking to generate 3x to 10x returns. I mean, that's really the juice. I love the core portfolio, but being able to really express those trades using a vehicle that's going to be able to give you 3x, 5x, 10x returns with very finite amount of risk. That risk versus reward profile is very advantageous to me as a trader, as an investor, as a father that's looking after my family's money. Like all of those things, to me, a favorable risk versus reward proposition on a regular basis. Guys, if you're listening at home, as a trader, as an investor of any time horizon, I mean, that's what we're looking for. And of course, the Macke Consumer Composite might be one of the greatest things I've ever heard in my life, because it really encompasses exactly what it is. It's the Jeff Macke Consumer Composite, not the Standard & Poor's Consumer or the NYSE. No. There's no funny business, right? There's no, additional motives. These are the consumer stocks because Macke said so, right? Because us as consumers have told him, hey, Jeff, we're consumer stocks, right? You might classify Uber as an industrial, but not Jeff Macke. No. Consumers use the Uber. Do we not? Right. So
that is our fishing pool, JC. This is where the ideas come in. It's I don't know which of these companies are going to benefit the most from AI. I don't know exactly which ones are going to maximize it. I just know what I need to see them doing, what I need to see in the stores when I go out there, and what I need to see them. This is the old fishing hole. I don't know exactly where the big fish are, but I know I can drag a few lunkers out of there if I spend enough time kind of working at it. And so the Consumer Composite Index is where we're going looking. This is my shopping mall. This is where I'm going to go find the 10 best ideas. And
us technicians, Jeff, we call them the universe, right? This is our universe, right? That's how Macke thinks about this is my mall. Of course,
universe does make it sound a lot more sexy. I'll be honest. I'll have to go with that.
Yeah, but mall plays with you though. That plays with the.
It resonates with me.
It plays.
Universe, yeah, it seems intimidating, but a mall, man, I can understand a mall. Yeah, and finally, JC, last thing, it's the weekly live calls. I'm excited. We're souping this up. I want to talk to the folks out there and really interact with them more. It would be it doesn't fit to talk about going out and watching customers, interacting with the people, going to Walmart. I like doing that. I love taking my kids shopping. That's just the best. I even like hanging out and taking my wife shopping. That's not so bad, because actually it kind of pays for itself. It becomes research rather than just a money sinkhole. And that's why I want to interact with you folks. I'm going to take live calls. We've been doing live videos every Friday. Now we're going to make it live. We're going to do a little Q&A, talk to the folks. It's exciting stuff. And I tell you what, but wait, there's more, JC. There's more. Finally, we have the boot camp. 4-part series. Part 1 is already up right now. It is where we're going to walk through the process of investing in consumer stocks, identifying trends before they happen, identifying, if you're lucky enough, And if we hang out long enough, in another 5, 10 years, we'll figure out what the next leg of AI is. But right now, we're going to be focused on, hey, how are we going to find the names that are going to give us 5, 6x returns, and the ones that are going to get left behind, frankly, because every new generation of investing, you know what? There's winners, there's losers. The consumer growth, it's about 4% a year. It's about 5% a year. If you want a good long-term bet, try to bet anyone that you ever meet that this Christmas is going to be bigger than last Christmas, because they love to say at the beginning of November, it's a repeatable cycle. No one wants to spend anymore. Christmas spirit is dead. Everyone's too cynical. They're too dark. They're too evil. That's just garbage. We know that the consumer is going to spend more every single year. We just don't know where they're going to spend it. And that's what I'm looking for, is where they're going to spend it. I don't care if that's a staple. I don't care if it's a discretionary. Amazon is a discretionary. Walmart's a staple, and if you drew a Venn diagram, they would sell almost exactly the same stuff. I don't care what sectors some crusty old dirtbag at the S&P industry decided these things were going to be in. I just care if they're interacting with the consumer, how they're doing it, and how I can make money investing in the companies. And that's really what we got, JC. It's exciting. I'm excited, man.
It's a great framework. I know you're excited because you know what's in there, right? So if you're out there and you're wondering what Jeff is so excited about, well, now you have the ability to access Jeff's portfolio and know exactly what is in there in real time. You get to look over his shoulder and seeing what the consumer is doing. And I love things that never change, right? I love things that never change in the market, because as a market participant, things are always changing. But what I love about things that don't change, in this case, the consumers are going to be spending money. It's going to go somewhere, and then you can actually see where that's happening and make money from it, see where money is leaving from, right? It goes both directions, and Macke is the guy to do that. So until now, this has never been available, but now you can get access to Jeff Macke's portfolio, 8 to 10 stocks that he's holding, 2 to 4 options trades per month to really leverage those opportunities. Access to the Macke Consumer Composite, the live weekly call, just to update on the stocks that Macke has in the portfolio, some of the ones that he's looking at on the watch list. Then, of course, the bonus Jeff Macke Consumer Investing Bootcamp. That's the 4-part series to really know how to do this yourself. And maybe you don't want to do it yourself. Maybe you're just going to tag along with Macke, but understanding the process is going to help you tag along better, right? Really help you understand that, of course, everything that goes down here at Stock Market TV comes with a 30-day money-back guarantee. At any point you decide that this portfolio of some of the most important companies in the world is not for you, no problem. 30-day risk-free trial, of course, with everything that we do here. So this is a $14.95 a year value, which even that I think is cheap, but we're going to knock off another $500, $9.95 for the year. You can cancel anytime. And then you can click the link here for the 35% off the regular retail price. If you're watching on the YouTube, you can click on the show notes. If you're on the chat, just click right there. Click on the link below, 35% off, $9.95 for the year, risk-free. Jeff Macke, I love a good risk versus reward profile, 0 risk and plenty of upside. One trade pays for a lifetime of membership.
Absolutely. And they're going to come, you just got to hang out. It's you never know. Again, we're fishing the right pool. I'll tell you that, JC. This is exactly the time you want to be getting involved in this consumer space, because the world is changing right this second. And we've gone from, you had to be a chip analyst 2 years ago, and that was where it was all at. And you had to pretend like you actually understood what they were talking about in terms of the compounding chip structure, input things, whatever. I don't really care. I want to know who's going to make AI glasses for my face. I want to know which companies are going to make their supply chain more efficient, their managers more efficient, going to get their companies that they're actually buying supplies from, get them to be better operators, and finally have a better consumer experience, because those are going to be the huge winners. We haven't seen a change like this in 8-9 years, and it's going to happen right now and over the next 2 or 3 years. My feelings won't be hurt if you bail, but you're going to leave some money on the table. That's my sense.
Guys, some people are wondering, well, why now? Why right now? Well, you're seeing why. Literally, the bifurcation between the winners and the losers that are developing and evolving every day is at extremes rarely seen throughout history. Like, why now? Like, hello? Like, just look at the market and the bifurcation between the winners and the losers. AI is accelerating both of those in both directions, and nowhere is it going to be more prominent than in the consumer, those taking advantage of it and winning, and those that are losing from it. Jeff Macke is my go-to guy there. So click the link below and join. I know we do have a few questions coming in on the chat, asking about the options themselves. These options, Jeff, do they tend to be a call or a spread to offset the decay?
We use some calls, we use spreads. My favorite kind of option is just getting greedy with just long-term, just leaps. I like to buy kind of slightly out of the money and just go with the leaps. Gives me some time. And it's a way, again, to juice your returns. And that's been kind of, I love a trend. Yeah, I know you love a trend. You're a technician. Who doesn't love an uptrend? One way you can enhance that is you take your core position. You're not going to incur just a ton of trading volatility in your own portfolio. You stay long the common and start adding leaps. But of course, we control, we do spreads, but keeping it relatively simple. This is not an options trading course. This is a strategic thinking, how we're going to take advantage of AI type of lesson and picking companies.
No, that's a great point. It's not like an options trading system as much as it is buying the stock. Just using this type of option to express the trade is really the best way to probably thinking about it. You're just using a different vehicle. It's very, in a very simple way. You're not complicating things. So I like
people
that.
Are animals, JC. Fear and greed. I'm tapping into fear and greed. And there's a time that a lot of years it pays off to be a little fearful in the consumer names. They don't necessarily grow so much. There's a time you want to be greedy. Once you find the winners, give me a little greed. There's nothing wrong with that. You're going to beat the market with that. That's how you make cash. And so the idea is to enhance returns, and that's the primary focus. Now, there's going to be one-off trades. The Crocs, we talked about them before. That was one-off trade that members got last week. That worked terrific because, I just figured they were going to do better than people expected, but that was one that you get in and out of. And so we're just trying to soup along, kind of juice up the returns a little bit as we go. But for the most part, we're keeping it relatively vanilla, nothing that you can't do on whatever kind of brokerage account you have right now.
Yeah, I like juicing up the trades with very well-defined risk parameters and then unlimited amount of upside. Like that, to me, that speaks volume, guys. So if you're listening out there and you're looking for that sort of thing, this is definitely that, right? So you've got the portfolio, you've got the main stocks, but if you want to juice them up, right, that's where the leaps come in. Got a great question coming in from the chat, Mr. Jeff Macke. How did you figure this out? Did you have a mentor or was it trial and error?
It was the greatest mentor there is, which is just experience, just flat out going through it before. It's everything they're all just a little different. I'm old enough to remember I got my start and opened my hedge fund for years during the .coms. And retailers would just append .com to pretty much any retailer on earth. If you were lucky enough to be long one, that was great. That was fantastic. But those gains were clearly going to be fleeting. That's how I learned to control my risk in terms of the downside. And the last time around is really when we kind of self-taught and had some mentors and some friends that are institutional type traders, and really kind of developed this again through mostly just personal experience and running my own book.
Yeah, so that was my next question. So it says you used to manage money professionally. Why did you decide to get out? Why did you decide to get out of that and manage your own money?
It was after the .com crash, and frankly, my dad got sick, to be perfectly honest with you. And my style of trading just changed over time. You get to a certain point professionally where you're going to be raising a fund. Listen, if you have a hedge fund, I'm not telling you to quit your hedge fund and start this. It's nice to collect 2 and 20, and that's great to do. But my personal style of investing, this is not for year in, year out. This is not the kind of, I don't want to be spending $50,000 a year for credit card data. I don't think that's necessarily worth it in terms of what I'm going to be doing. I don't want to grind out a living. I'm looking for kind of bigger returns and more focused bets when the opportunity arises.
No, that's great. And that, you're doing a great job of segueing through these questions. Like you don't even see these questions coming in. But no, I mean, it's so, if this works so well, why are you telling regular investors like it about you? I know it's not for, it's not because you need the money. You're doing just fine. Why are you doing this?
There's pleasure. I like teaching. I actually like the process of sharing. There's plenty of target options for us to share. Like if someone buys them after me, we're not going to run out of them.
Yeah.
There's plenty of shares, and it's. I've been talking in public. I started writing for the Motley Fool in 1995 for AOL. You have mail. That was, geez, again, mid 90s. It'll happen to you folks at home. You wake up old at some point. I've been doing this for a long time. I love the process of teaching, love the process of just kind of sharing what I'm doing. And when these kind of revolutions happen and you catch it and you see it and you understand it, well, you don't want to keep quiet about it. It's fun to talk about.
Yeah, I mean, listen, I couldn't agree more. As somebody who, you've been doing this a lot longer than me, but even for me, blogging as long as I have, and working with, building community and kind of being a part. I mean, it really is so awesome, and you meet so many amazing people, yourself included, by the way. I wouldn't know you if I wasn't writing every day for decades, right? So, I mean, just a perfect example,
And that's how you build a network. You build a family. It's some of the people, some of my best friends now are people that used to read me, or I used to read them, and you get to know them. You and I met it was a Stocktoberfest a decade ago or something. That's how we got to know each other. I mean, it's you develop your network, and no one wants to be just a hermit doing this.
I was doing Yahoo. I think we met for the first time, you interviewing me on Yahoo Finance.
I gave you your break, kid. I know. I didn't want to say it.
That was early on. That was early on. I think Matt Nesto had already interviewed me, but that was early on. Guys, you guys don't even understand how far back Macke goes. I mean, you want to talk about a true OG. Tells it like it is, because he doesn't give a shit, right? Macke will tell it to you like it is, and I respect that so much. And he'll tell it to you in a funny way. Like, Jeff is like, he can be a serious guy, but Jeff is like DL hilarious, right? But Jeff is like really smart, so you gotta like keep up with his humor, because Jeff is really, really funny. So you, as being part of the Macke portfolio community, are going to get to have so much fun, not just making money, because making money is very fun, but these weekly videos are so awesome, really getting to know Jeff, seeing how he's thinking about the market, not just company, but generally speaking, really the state of the consumer and where he's finding this information. He's like, oh yeah, I went to business school in Stanford with that guy, and then he became the CEO. That's how I knew that company. Like, these are the types of reasons that this guy's buying the stock. So information that I certainly don't have, that most people do not have, because they didn't go to business school with these public CEOs of publicly traded companies and know their background and know that they're animals that are going to go in there and make a ton of money. Like, I don't have those kind of connections.
In the case of Josh, just not a communist, which gave him a huge leg up over the people that are running Etsy before him.
Low bar yeah. There on that one.
Low bar, smart guy. Worked out great.
You're like, listen, I went to college with that guy. He's definitely not a communist. Like, stocks got to go up.
He would have told me. I for sure that would have come out during the business school case studies. Oh, I'm a communist. I don't actually believe in your capitalist system.
Oh man, guys, listen, this has been a lot of fun. This is a topic I love, because it's easy for me to understand. Like, oh, the company sells hamburgers. The company makes tennis shoes. Like, it's not like this, like, complicated. Like, yeah, I'm going to drive through 6 of these on the way to go pick up my daughter. It's, you know what I mean? Like, I understand. Yeah, for sure. Etsy.
And you know what? You bring up hamburgers, JC. That's a classic example. For the first few years of AI and robotics, the whole idea was that there was going to be machines that were going to be building you hamburgers, and that was going to be the future of hamburgers, was going to be these Autobots. That's a load of garbage. It's retail evolves. You seldom see a revolution. It's not going to be robots making your hamburgers. It's going to be AI that's going to teach the McDonald's management how to actually deploy their schedule better, to teach the people that are working in the stores how to be the best associates they can be more efficiently, and to take your order faster, to know who you are and to bring up your order faster. That's going to be the future. That's kind of how we're going to see this evolve, and it's going to be a matter of efficiency. So it does all tie together. I mean, there's a segue in every story, but when you talk about, it's you take something like a simple hamburger. Well, you know what? The hamburger houses that deploy AI are going to become much more profitable, and hopefully we're going to be long them in the portfolio. Which is why you're seeing the McDonald's of the world outperform and kick the crap out of Wendy's when you see them in the actual real existing world, because Wendy's doesn't have the systems.
I mean, you're literally seeing McDonald's hitting new highs and Wendy's hitting new lows. Like, I mean, you're literally seeing that bifurcation in real time. So to get Jeff Macke's portfolio, click the link 8 to 10 stocks that he's holding in the portfolio with real-time alerts anytime that portfolio changes at all. 2 to 4 options trades per month to really leverage those opportunities. Of course, the Macke Consumer Composite, this index anywhere between 25, 50 consumer stocks. Think about it as that watch list, where the names in the portfolio are going to come from. Talking about it every week on Fridays. One of my personal favorites, really getting your perspective on a weekly basis. And then, of course, the boot camp, right? So this is the bonus originally developed for Investopedia. This is a 4-part series that will teach you how to invest in consumer stocks the way that Jeff does. And like anything happening at Stock Market TV, this comes with a 30-day risk-free trial. So that's right, 0 risk and unlimited upside. Man, as somebody who likes a good risk reward, I like that. And the final thing that I would like to add before you guys go, and I want Jeff to hear this too, is that, something like this is really important and valuable to me personally, like JC. Like, yes, I get to talk to Jeff and he's cool and the whole thing, but it's bigger than that because like I am constantly looking for opportunities that are uncorrelated to what I'm doing. I have retirement accounts and kids' college funds that are long only. I have real estate that goes up and down, with the market. Like I'm in no matter what I do. So I am as a father, as a businessman, as just someone with like common sense that's trying to manage risk, looking for opportunities that are uncorrelated to the assets that I already have is very important to me. And this is that. This is that. So I just want everybody to know how important it is to me selfishly, so you know where I sit on the table. Jeff is in a different scenario. This is what he does. Jeff is very focused and concentrated in these positions. That's his strategy. For me, this is one of my strategies, right? So that's how I'm able to take, his expertise and apply it to what I'm trying to do, for me and my family and my overall portfolio. So for me, huge value add. And I get to learn so much about companies I get to see every day. It's just cool. I like drive around, my friends think it's cool that I have all these fun facts.
And something, it's when your wife likes a pair of fancy shoes, she likes the Ons, and you can say, that's a little Swiss company. They're coming out. It's a little highly valued, but it's an absolute trendsetter. And a little something about the stocks that you see. It's like that the people in your neighborhood skit from Sesame Street.
I got to tell you, these conversations great for the marriage. If your wife is into shopping like mine, you get to converse with her about these stores, TJ Maxx. Right? And then I tell Macke what she says. Macke uses that information and vice versa. You're like, hey, Macke says this company's great. She's like, yeah, I don't know about that. She doesn't always agree, Jeff. That's the beauty of it all. But that's okay.
That's okay. That's okay. It takes a lot of customers to drive 70% of the American GDP. They can't all be Mrs. Peretz and Mrs. Macke. You need
That's right. That's right. Thank God she spends enough money as it is in half the stocks that you mentioned today. Ladies and gentlemen, click the link. This has been a lot of fun. Listen, Jeff, seriously, I can't oversell it. Jeff is really the man. Jeff Macke, when it comes to the consumer, he is the guy. Couldn't even tell you who number 2 is. There is, I'm not just saying, who would even be number 2? I don't even know. Oh, so
thank you, man. It's my pleasure. It's exciting, and it's a great time to be here. I think we're going to do some really cool stuff over the next few years.
100%. All right, guys, click the link. I'll see you in there. Jeff, thank you so much for doing this. Really love you for it. And everybody out there, kudos to you. You could have been anywhere in the world. We want to be here, learn something, right? Try to get better at what we're doing here. So I appreciate you. A lot of love. See you on the next one, guys.